All right, well, those are the headlines that we are going to be tracking for you all evening on ET Now. Well, first up, our topic of discussion is IPOs. Like I said, we have not one, not two, but 5 companies that are queuing up and are open for subscription. Today we had to open a very watched Nazara Technologies. There's also the Suryoday Small Finance Bank. But the question is, should you be investing in every and any IPO, especially because you are lured by a lot of the listing day pops that we have seen for the past IPOs that have made their debut on the Lal Street? Further, how can you essentially understand a company when it's in IPO stage before you sit to subscribe to it, especially given the fact that most of the historical information with respect to share price movement, with respect to top line, bottom line margins is absent, because up until now the company was private. It's only now that the company will start disclosing its key financial metrics, to the public and to the exchanges at large. So in the midst of all of that, how should you sort of make sense of all the information that's also, by the way, there in that 500-page DRHP that the company files with SEBI? Let's introduce on the show Mahantesh Sarabad. He's the head of retail research with SBI Cap Securities. Mahantesh, thank you so much for taking our time today and joining us on the Money Show, which I hope will be, I'm sure will be an educational session as well for a lot of our retail investors. So Mahantesh, we are seeing a lot of companies announce their IPOs, launch their IPOs, try to make a debut on the Lal Street. Retail investors, of course, they're very lured because, there's that prospect of making great returns. Many of these companies have given great returns on day one, Happiest Minds, Masgordoc, etc. But does that mean that you should, sort of sit and apply for every IPO out there?
The answer is a no, because one should understand that IPO application for a retail investor is a sort of a lottery that exists. That means not every application or every applicant will get an allotment, as opposed to an institutional investor or an HNI investor, where the allotment is in a way assured based on the proportionate or pro rata kind of basis. In fact, for institutional clients, there's something called anchor investors. Their allotment is in a way given. So for a retail investor, the allotment is something which is a lottery. That means not every applicant will get that allotment, and your money gets blocked in the interim for this IPO. So therefore, the general answer for applying to an IPO would be a no.
All right. So we'll talk a bit more on that, actually, the missed out opportunity of sorts for retail investors. But Mahantesh, before you would sort of subscribe to an IPO or, recommend your clients to subscribe to an IPO, what are the top 4 or 5 points, factors that you'll make sure you look at, you read up on about the company before you decide to subscribe?
There are good companies. When I said the general no to your first question, there are good companies where you should endeavor to invest. One is through the IPO mechanism itself, and one is on the listing day. So what are these 4 or 5 things that we really look at when it comes to IPOs? Is that first and foremost, what is this IPO for? What is the objects of the issue? IPO is an issue where money gets raised from a set of investors by the company or the promoter or some persons behind the promoter in terms of investors. So you have to first look at what is the objects of the issue. Why is this money being raised? Who is getting that money? And what purpose is that money being utilized for? The second thing that you look at from that IPO proceeds are, what is the quality of the promoters? What is the post? Is this capital being used for growth? Is this capital that is coming in is utilized for debt reduction? Is the capital getting used for some future acquisition, and so on and so forth? The third thing you should be looking at is post IPO, how big this company will be, how large this company will be. One of the measures of that size of a company is not its revenue or its profit size. Its size is often determined in the markets by the market capitalization. So when an IPO comes in, you have to know what is the size of that company by looking at its post-listing market cap. What is it market cap going to be at the price at which the IPO is coming in? Uh, the third thing, or rather the fourth thing that you will look for is the valuations behind the IPO. So valuation is something which is also mentioned in that DRHP document, but something you should be aware of. What are the valuations of the company? The price, that means the stock price or the IPO price that is mentioned in the price band, is not the price that you're paying. You're paying the price through the valuation. And perhaps the last thing we will look at, what is the prospect of this company, what is the outlook of this company. Does the management give some kind of guidance? Does the management tell you about what is the industry all about? Is this industry a new industry? So these are the things that we look at: objects of the issue, promoter quality, utilization of that issue money, what is the what are the prospects of the company, the valuations, and the size in terms of market cap.
Okay, so lots of pointers from valuation to business to IPO size. How is it going to utilize the funds as well? Anything, when we talk about the IPO fund utilization, I want to talk about that point first. Mahantesh, anything that could perhaps be a red flag for you over there, which would make you believe that, okay, I do not like this reason why this company is raising monies, and maybe that may preclude you from subscribing? Have you maybe come across any instance like that?
OFS comes in. That means an offer for sale. IPO, where there is an element of offer for sale, will have certain investors exiting partially or fully, and many times you would also see promoters themselves taking money home. So one of the red flags that we would look at is that it is fine for an investor who has backed this company in the recent past to exit, either partially or fully, through the mechanism of the IPO. But the question that comes to one's mind is, why is the promoter exiting? Why is the or partially exiting? Why is the promoter taking some portion of that money home? That's a red flag that we look at. The only reason why we will ignore this red flag is if the promoter is selling a portion of his stake to meet the minimum listing requirements. The minimum listing requirements for a company is 10 years. By the time it is 3 years, it has to, 10%. By the time it is 3 years, it has to be 25% listed. So if that's the only reason why the promoter is selling his stake, then we will ignore that red flag.
All right, fair enough. Valuations could be a little tough for maybe the retail investor to understand. So, what would you call as expensive, or what would you call as, reasonable valuations?
The retail investor can do is very often it is about the size of the company, right? Valuation finally determines the size. And I explained to you, we look at the size from the perspective of market cap or market capitalization. A retail investor can very well look at in the size of that company in the form of revenues that it generates per annum. There is a little bit of information given in the DRHP about the revenues of the companies. I'm not asking you, the retail investor, to really look at profits, the profits that they make, or the profitability ratio, or certain return ratios, and so on and so forth. The single biggest measure is compare the revenue size of that company with something which is similar that you know of in the listed space, and you will get a judgment. One of the feel factor that you can get is when the company is big, is it a leader? When it generates X amount of revenue, is that revenue coming to it because of its market leadership, to the exclusion of some other sort of company? Is that revenue coming in because they're doing something a little different? Maybe the revenue is coming through large exports, or maybe the revenue is coming through some branded products. So revenue in terms of size is one of the proxy for the valuation that a retail investor can look at. Otherwise, of course, he should be taking professional help when it comes to understanding valuation and whether that particular IPO is expensive or otherwise.
Okay. Mahantesh, now, many a times when we want to read through an IPO, there is that big fat DRHP that is issued, that has a plethora of information. But obviously, everything need not to be skimmed also, by retail investors. So, what would you recommend retail investors, read through? What are the important pages in the index that, according to you, retail investors must read?
Yes, there is a table of content or the index as you refer to it. Typically, it is available on the second, fourth page of the IPO or maybe the third page of the IPO. Nowadays, these DRHP documents come in a soft copy. That means it is available online. You can sort of download it and it is clickable. So in the contents, you can click through certain sections. When you click that, it directly takes you to that particular page. So many a time the contents are such things as what is the objects of the issue. We talked about one of the things that you should be looking at is what is the objects of the issue. Why is this money being raised? Who gets that money? So if you go through that objects, when you click on that, you will go to that page. So objects of the issue is something that you should be looking at. Number two, there is something called as capital structure mentioned. That means that at the end of the day, it's number of shares that are getting issued, correct? So you should know how many shares are being issued, and therefore, when you are applying to that IPO, you should know total. You'll get a fair idea of the size, therefore, of the company in terms of market cap. There are other things. There are risk factors also mentioned. The risk factors is a long kind of section, but it suffices to sort of glance through at least the headings when it comes to the IPO, the risk factors of the IPO. Then there are certain things that which talk about the industry structure and it talks about the company itself. So you should definitely go through these two things which tell you the industry structure. Sometime back, I explained that you should be looking at such companies who have market share, high market share within the sector or within the industry that they operate in. You will get that information when you click through that industry section. You will get to know a little bit about the company when you go through that about the company kind of section that is available in the DRHP. Broadly, this is what you should be going through. And of course, IPO means you should know the price band, you should know the lot size. These are the bare necessities when you are applying, because that will tell you what is the amount that you need to apply.
All right. Okay, so finally, let's touch upon the topic that we spoke right at the beginning, and that is allotment for retail investors. Like you mentioned, it's almost like a lottery system. However, you did follow it up with the fact that many retail investors could then, if they don't get an allotment, and I'm sure many retail investors will nod their heads in agreement right now, you can sort of participate in the opportunity after listing. But after listing, we usually see a sharp spike. So, Mahantesh, would you like to share how investors can find opportunity post-listing?
On the listing day, the market has what is called as a pre-open session. That means the IPO doesn't hit the market. The listing doesn't really happen till 10:30 in the morning. There is something called as a pre-open period during which the orders are accumulated. The buyers will put their orders of buying of shares. The sellers will put their orders of selling the shares that they have got. That means the allottees who have got the shares will like to sell their shares, and buyers who have not got an allotment can then put in their orders during this pre-open session. And you will be able to gauge. This pre-open session is sort of free in the sense there is no price band kept. Therefore, you will see that pop up. The IPO price may be let's say 100 rupees, but in a pre-open session, the IPO price will fluctuate from let's say, for argument's case, 70 rupees to 170 rupees. It can that large a price band can exist during the pre-open session. So a retail investor who likes the company, who wants to invest in that company and hasn't got an allotment, can participate in that company during this pre-open session by putting in the order and hope that the order kind of goes through. Uh, Obviously, if the IPO and the company is good, you will get that 170. You'll get a price closer to 170 and not 70 in the example that I sort of trying to cite and explain. But it's you can still purchase it around that price. The opportunity for the retail investor thereafter is once the order gets confirmed in the pre-open session, he has to wait for the listing to happen. And typically, once that the listing happens, which is at 10:30, the first price gets announced. The first listing price gets announced, and a 20% band is kept. 20% on the upside, 20% on the downside is the band that the exchange puts in as the circuit limits. I think most investors will be familiar that in typical stock markets, you have what are called as circuit limits. Some are at 5, some are at 10, some are at 20, etc. So you will get those 20% circuit limits. So if your order goes through and this company is a good IPO where you want to invest in, you will find that it will further go 20% up from the first price, the listing price announced. And potentially you get that 20% at least as your gains. But you'll have to wait for it because the orders will be delivered to you T+2. That means another on the third day. Until then, you will not be able to sell the shares.
Well, Mahantesh, I'm sure this has been a very informative session for all of our viewers. So I really appreciate you taking our time and joining us today on the show.